Thanks. Thanks for coming today, everyone. So I'm going to run you through a bit of a market update as to what's happening in Queensland and Northern Territory, try and give you a bit of the lay of the land of what we're seeing out there at the moment. Luckily, neither of these states are in lockdown like what we're seeing in Victoria, but obviously there still are challenges. First recession in 30 years. A lot of the domestic borders are also shut. But I would say that both markets are doing reasonably well considering the state of the overall economy at the moment. So to start off with, if we look at search volumes in Queensland, what you can see, and you'll see this with the Northern Territory slides I bring up next as well, is that in that first round of lockdowns nationally, we saw a big fall away in search behaviour for about 3 weeks during those initial lockdowns, and then a really rapid rebound in search behaviour coming out of not even whilst we were getting close towards the end of those lockdowns. And then on a week-by-week basis, there's been a bit of volatility as you'd expect, but we've generally been seeing growth in weekly searches, and we're continuing to see that. And then if you look on the right side, you can see that on a year-on-year basis, searches for properties for sale here in Queensland are up about 40% from where they were a year ago. So there is a lot more people logging on to realestate.com.au and looking for properties than we were seeing at the same time last year. As I said, a very similar story for Northern Territory. You can see that there was quite a large spike in search volumes last week. And you can also see that search volumes are much higher than they were at the same time last year. So even in the Northern Territory, a market that hasn't done particularly well over recent years, there is more interest for property than we've seen for some time. And if we look at how that tracks, so this is looking at the left at the change in the total for sale search activity from the recent peak. You can see that certain markets, particularly Victoria, now that it's back into lockdown, Western Australia and South Australia are seeing fewer searches than they were at their peak. But both Queensland and Northern Territory last week was the highest number of searches that we've seen on record, so doing quite strongly. Then on the right side, you can see the year-on-year change in weekly search volumes. As I said, Queensland's up about 40%. Northern Territory's up more than 50% from where it was a year ago. So very strong activity compared to last year. Even a market like Victoria, where it's pretty much impossible to transact property at the moment. You can still do it, but it's extremely difficult. The search volumes are still up 17.5% from where they were last year. So you can see that there's no lack of interest and thirst for residential property. The big question, I guess, is just whether people are prepared or not to actually transact in the market. Now, if we look at the rental market, a similar type of story. You can see that there's been a big fall away again as we went into lockdowns. But search volumes have been generally trending lower for the last couple of months. Even still, here in Queensland, search volumes are up from where they were a year ago. And it's a similar story in Northern Territory. Although Northern Territory never really saw the big slump that we saw in other states and territories through COVID. And it's never seen the big rebound, obviously, either. But you can see that there was a bit of a spike in rental search activity last week. And again, it's still up from where it was a year ago. So if we look at what that looks like in terms of where search activity is from the peak. So in Queensland, it has fallen by 15.5% from its peak. In Northern Territory, it's fallen by 13.5% from its peak. But if we look at a year-on-year basis, you can see that search volumes for rental properties are up about a quarter in both Queensland and Northern Territory from a year ago. And the rental market's an interesting one because you've got some big factors. You've got Queensland shutting its borders to New South Wales and Victoria, and Northern Territory shutting its borders to a lot of other states and territories. And particularly for Queensland, New South Wales is a big source of migration into Queensland. And then you've also got international borders shut. So we know that a lot of people that would potentially migrate to Australia aren't coming at the moment. And obviously foreign students aren't coming into the country as well. So whilst overall the rental market does have some challenges at the moment, people are still keeping a pretty close eye on the rental market. And my suspicion is that a lot of those people are looking at what's available, keeping a very close eye on the market to see when their lease comes up, can they get a better deal if they move away? You know, can they drop their rent and get an equivalent sort of property? So that's why I think we are still seeing a lot of eyeballs to the rental section of the site. One of the other things we've started tracking is the number of preliminary sales. And a preliminary sale is on our site when someone has a property listed for sale and they move it from the for sale section to the sold section of our site. And you can see that preliminary sales are higher than they were a year ago. And you can also see across each state and territory, Tasmania is actually the only state and territory where sales volumes are actually lower now, or lower last week, than they were at the same time last year. You can see also, sorry, going back to this chart, for about the last 8 to 10 weeks, sales volumes have actually been higher this year than they were last. And we didn't really ever see the collapse in sales that we were expecting in that first round of lockdowns. We certainly saw sales volumes fall, but transactions were continuing to take place in the residential property market. Now, if we look at Queensland, you can see this is looking at the preliminary count of sales. Again, before COVID, sales were well above where they were last year. Then we went into the lockdown and sales were generally tracking slightly lower than a year ago. And then again, for about the last 10 weeks, despite a few bumps, generally speaking, sales volumes have been higher than they were a year ago in Queensland. One of the really interesting things, though, is to have a look at what's happened with vacant land. And since the announcement of Home Builder from the federal government, we have seen a big increase in vacant land sales. Now, they still make up only a small part of all sales. And keep in mind that vacant land sales that we're tracking here are vacant land properties listed for sale on the general real estate section of our site, not the developer section. But you can see that there has been a big increase in demand for vacant land, and that's been witnessed right across the board in all states and territories. If we look at Northern Territory, on a weekly basis, the volume of properties transacting is much lower than we see in most other states or territories. And you can see that generally sales volumes are pretty similar to what we were seeing last year. But I mean, look at the volumes. You're looking at generally between about 10 and 20 sales per week in Northern Territory. And that's why I'm not going to actually show you the land sales data, because there's plenty of weeks where we get no land sales in Northern Territory. If we look at new listings, this is a bit of an interesting one. So if we were to look in Melbourne at the moment, new listings have dropped about 80% over the last 2 weeks. In Queensland, they're holding up better, but you can see that new listings have started to fade a little bit, particularly in metropolitan areas of Brisbane over the last couple of weeks. And this really reflects more broadly at a national level the weakening of consumer confidence. Whilst we can still transact properties in Queensland, much more easily than they can in other parts of the country, the challenge at the moment is that when we've seen this big COVID outbreak in Victoria, we've seen a smaller outbreak in New South Wales, and everyone just kind of reminds themselves that we're in this pandemic and trying not to get too far ahead of themselves. So vendors in particular have started to show a little bit less of a preparedness to list their properties for sale, which is discouraging given that there was this big, fairly rapid increase in listings coming out of COVID, of the COVID shutdowns. If we look in Northern Territory, obviously it's a much more volatile series, but it's actually seeing new listings increasing in the Northern Territory at the moment. You can see over the last week, it's shot up quite a bit. And then if we look at nationally, so even over the last month, you can see that in Victoria, for example, new listings are down about 60%, and they're about 55% lower than they were a year ago. Here in Queensland, they're slightly lower over the month and slightly lower year on year. In Northern Territory, you can see a big increase over the last month in terms of new listings coming to the market, and they are slightly higher than they were at the same time last year. But I guess what I would say is we've seen a big fall away in Victoria, but the fall aways haven't been as significant over the last 3 or 4 weeks in the other states, but it's definitely evidence that what's happening in Victoria is having an impact right across all states and territories at the moment in terms of people's preparedness to go and list their property for sale. Now, a new piece of data we've developed is a demand index. And basically what the demand index does is it takes all that search activity that we see on our site, and we basically score people based on how they are interacting with a listing. So someone that's showing a high propensity to transact on a property, whether that be to buy a property or to rent, will be someone that saves that search. Will keep going back to that property, looking at all the photos, looking through their floor plans, maybe emailing this property to someone else, sending an inquiry to the real estate agent. That's someone that's showing a likelihood that they're going to transact on a property soon. On the other hand, someone that scores lowly on this index is someone that might look at a property, flick through 3 photos and never come back to that property at all. So this demand index that we've built is looking at those people that are showing a higher level of interaction with those listings. And you can see, again, during those initial shutdown periods, interaction with listings fell off. I mean, the number of people looking at listings fell off as well. But since the lockdowns ended, we have seen a relatively high proportion of people showing this high interaction with listings. And you can see, whilst it's flattened out a little bit over the last couple of months, it's still significantly higher here in Queensland than it was a year ago. And similarly in Northern Territory, you can see that there was that fall away in the demand index as we went into lockdown in mid-March, and it's come back. And whilst it was falling over the previous 2 months, you can see that demand in Northern Territory has started to trend higher again over the last 3 or 4 weeks. And it's actually at a historic high at the moment. So again, looking at these interactions, so Queensland, Tasmania and Northern Territory, high intent listing interactions are at a record high at the moment. You can see there's marginally lower in the ACT and New South Wales, and then somewhere like Victoria has seen a big fall away. But also interesting to have a look at where we are now compared to where we were a year ago. So in Queensland, these interactions are up 40.5%. In Northern Territory, they're up 42.8%. Now, remember a year ago, Banking Royal Commission had just finished. We'd just seen the federal election, and a lot of people were expecting a change of government that didn't actually come to fruition. And we were just starting to see the market recover. And it's things like this that suggest to me that the housing market is not going to see those big falls that we saw, that some people are predicting, because there are still a lot of people out there that are very serious about buying a property at the moment. It's just when and if they're going to have the propensity to actually transact on the property. I think the other thing to not underestimate is people have spent a lot of time in their homes over the last year. Those things that annoy you a little bit about your home, but you can deal with when you go into the office 5 days a week, they start to become pretty unbearable when you're locked up at home working from home for 6 months of the year. And I think that is also going to be driving some people to want to either do renovations or move property over the next few months. But as I've shown you, one of the challenges at the moment is that the amount of supply of stock on the market is actually quite low. Now, another thing we like to look at is views per listing, and this is looking on a monthly basis. So this is the average for a listing, the average number of views you can expect for that listing. And you can see over time, Queensland and Northern Territory, relative to the other states and territories, have quite a low number of views per listing, but I'm going to break it down a little bit further for you. So looking at views per listing, so I've got 3 charts here, the average number on the left. And you can see in Queensland, it's 854. In Northern Territory, it's the lowest of all states and territories at 502. And then I'm going to look in the middle at the change between February and July. And the reason February is because it's before any of the lockdowns happened. And July is obviously where we are now. So we're actually in Queensland 30.5% higher than we were in February. In Northern Territory, we're up 29.4%. And then if you look at the year-on-year change in views per listing, again, some pretty big numbers there. Queensland up 49%, Northern Territory up 61.4%. So if we break Queensland down a little bit more and look at the SA4 regions of Brisbane, you can see the western suburbs of Brisbane actually sees the highest number of views per listing. And you can see that the areas of Brisbane in particular, inner city, west, south, north and east, tend to see a higher number of views per listing than places like Ipswich and Logan. But if we look at on the right-hand side at the year-on-year change in views per listing, up right across the board and pretty impressively too. You can see Brisbane inner city seeing the weakest year-on-year growth, but it's still up 32.8%. But Ipswich and Moreton Bay South are the markets where we're seeing the biggest year-on-year increase in views per listing. Ipswich up by 2/3, Moreton Bay South up by nearly 60%. So I guess that highlights that there's growing interest for those more affordable areas of the city at the moment. Then if we go to regional Queensland, again, same numbers, so views on the left, and then the year-on-year change. And again, year-on-year changes right across the board. Now, the biggest year-on-year change is Queensland Outback, but read that with a grain of salt, given that there was only an average of 117 views on a properties listed in the Outback region of Queensland. But we look at some of the other areas. Townsville up 57.5%, Sunshine Coast a 57% increase in views per listing, Gold Coast up 56.1%. So some pretty impressive numbers there in the regional parts of Queensland. Now, there's only 2 SA4 regions of Northern Territory, but it'll give you an idea of what we're seeing. So you can see specifically in Darwin, obviously properties listed for sale in Darwin get a lot more views than they do outside of Darwin. But both areas of the Northern Territory have seen quite significant increases in views per listing for properties for sale, particularly Darwin up 64% over the last 12 months. Then if we look at the rental market, and I haven't touched too much on rents, but I think it's really important to consider the rental market because we know that investors are a big cohort of the market. And as I said earlier, they're really facing some challenges at the moment. Borders are shut, so there's a lot less demand for rental accommodation. But you can also add into the mix there that it's not just the case that borders are shut, but also you've got home builder working in the background, encouraging a lot of first home buyers into the market. And they're encouraging first home buyers into the market, which is great. They're going to own their own property, but you've already got this very challenged rental market, which is now going to be faced with more people leaving the rental market because they're moving into home ownership. So if we look at views per listing for rents, Queensland and Northern Territory do all right. Well, Queensland in particular has a relatively high number of views per listing. And in the Northern Territory, you can see that it's trending higher. So in terms of views per listings for rental properties, for properties for rent, I should say, not for rental properties, but properties advertised for rent, there's about 1,500 for each property in Queensland. That's actually doing better than Victoria and New South Wales at the moment. And in Northern Territory, you can see it's 956. In terms of the change from February to July, you can see that Queensland's up 13.8%. Northern Territory's seen a big increase, up 46.6%, the biggest increase of any state or territory in the country. And then year on year, you can see both Northern Territory and Queensland have seen increases as well. We then again look at the regions. So the area that actually sees the most views per listing at the moment in Brisbane is Moreton Bay South, which is quite interesting because you would probably usually think it's the inner city areas. But I think this really highlights the impact of the absence, particularly of foreign students, but also of people migrating into Queensland. If you have a look on the right side there, the Brisbane inner city market, rental market there, has seen a 35.7% reduction in views per listing compared to a year ago. Brisbane West, another large fall as well, and the South as well. And then the biggest increase, again, the Moreton Bay South region, up 58.1% from where it was a year ago. And then in regional Queensland, a bit more mixed. You can see that Sunshine Coast and Wide Bay actually see the highest number of views per listings for rental properties. And they've also seen the 2 largest year-on-year increases in views per rental listing. Sunshine Coast in particular, 53.9%. So I wonder if that's people that have migrated to Queensland going and renting on the Sunshine Coast for a while before they actually go and purchase their property. On the other hand, you can see Townsville, Cairns and the outback of Queensland have seen a year-on-year decline. And then looking at specifically at Northern Territory, we can see again, Darwin sees a lot higher number of views per listings for rental properties like it did for properties for sale. And then over the year, views per listing in Darwin is actually up 32%, while it's fallen about 29% in the outback areas of the Northern Territory. So then moving along to price growth, and I guess Brisbane's a market that hasn't been a particularly strong performer in terms of capital growth over recent years. It's still generally been positive, but it certainly hasn't followed the trends that we've seen in Sydney and Melbourne of really strong price growth. And you can see that things were definitely starting to pick up pre-COVID, and we're actually still seeing generally some growth in the Brisbane market. Darwin's a bit of a different story. Darwin market has really been underperforming since about 2011. But even in Darwin, you can see before COVID hit, there was signs that the market was starting to recover. It hasn't started to taper off yet on an annual basis like what we're seeing in markets like Sydney and Melbourne. So again, let's delve into things a little bit deeper and have a look at our index and what it's showing. So the red bars are the annual change in prices, and the black bars are the quarterly change in prices. So across Brisbane, over the last 3 months, you can see the inner city, the west, the north, and Logan Beaudesert have seen falls, generally fairly moderate falls. Brisbane inner city and Moreton Bay South have actually seen prices fall over the last 12 months. But given what we're seeing with views per listings and that, it looks like the popularity of Moreton Bay South is certainly picking up at the moment. Then in regional Queensland, you can see the best performed market over the last year has been Mackay, followed by the Sunshine Coast, and then Townsville, Toowoomba and Gold Coast have seen growth, and then some of the other areas have seen price falls. But generally speaking, a lot of those regional markets, particularly the bigger ones like Sunshine Coast, Gold Coast and Mackay, have still seen price growth over the last 3 months. So you can see that the trends that we're seeing at a national level in Sydney and Melbourne are certainly not necessarily the trends we're seeing played out across other parts of the country. Now, moving on from that, there were 2 more slides I have, and I think they're really important ones. I've kind of talked already about consumer confidence. And for a lot of people, when they buy a property, it's the largest single decision and expenditure they'll ever have. Well, each time they buy a property, that's what it is. But it's one of those things that you really want to be confident about. You know, confident that you're going to have a job, confident that you can repay the mortgage, confident that your family's going to be healthy. And you can see that confidence has really been trending lower for the last couple of years. It started to fall during the bushfires earlier this year, and obviously during COVID we saw significant falls, and not really surprising when we've gone into the first recession we've seen in 30 years. Now, I remember saying this to a few people in July. I was absolutely astonished at how quickly consumer confidence rebounded coming out of COVID initially. You know, if you told me in March that confidence would be where it was in July, I would have told you there's no chance. But unfortunately, because we've had that second wave in Victoria, you can see that confidence has really been damaged, and it's fallen back to levels lower than what we saw during the global financial crisis. Now, encouragingly this week, this data was just put out today by ANZ and Roy Morgan. For the first time in 7 weeks, there was an increase in consumer confidence. It's up 2.4%. It's still very low. But with COVID cases in Victoria coming under control, with New South Wales never really seeing that outbreak of COVID that it was all very concerned about seeing, hopefully we can continue to see confidence improve from here. Now, it's going to be a long way back to average levels of confidence, but if we can slowly start moving confidence higher, that's really going to be encouraging for the housing market and increase people's preparedness to transact on properties. And then business confidence, and it's a fairly similar sort of shape to the chart that we saw previously. There's 2 parts of business confidence. There's business conditions that are surveyed and business confidence. Both saw rapid declines in March and April, then rebounded quite strongly. But business confidence in the latest data, and this is data for July, really faded as well. And that actually was this was measured before the impact of the re-lockdowns in Victoria. But that's definitely going to be a further dampener on business confidence and business conditions going forward. So really, whilst the property market's in a good position, very low interest rates are huge amounts of stimulus for property. We've got the government introducing things like Home Builder, which really help. There's pent-up demand there. The market came into COVID with a level of momentum. It's still going to be influenced, what happens in the property market, by what happens in the broader economy. And the quicker we can open things back up, get people back to work, reopen borders, the better it's going to be for the economy, and the better it's going to be for the housing market, because it will mean that businesses and people can have higher level of confidence, and that's really important. So that's the last slide from me. We're going to go to Q&A, but just before I do, we're going to flash up a question, a poll for you. So if you could answer that, and then Dee will take over and we'll start answering your questions.
Okay, we'll just give you another couple of seconds to complete the poll. Thank you very much, Cameron. We've got some good questions coming through. It's not too late to submit your questions as well. We've got the Q&A function at the bottom of the screen, so please feel free to pop your questions into there and we'll do our best to answer them. Okay, so Cameron, got a couple of questions for you that are sort of specific to Brisbane, Sunshine Coast and the Gold Coast markets. Do the regional coasts follow Brisbane trends, or do you see that there's some specific trends for each one of those markets?
The region's generally fairly similar, but what you actually find, for example, is when the borders are open, more people migrate to the Gold Coast and Sunshine Coast as opposed to Brisbane. So you do find definitely times that the Gold and Sunshine Coast are actually stronger than Brisbane. The other thing to keep in mind is property on the Gold Coast and Sunshine Coast is typically more expensive than property is in Brisbane as well. So that's a factor. But I think coming out of this, I mean, a lot of people have been working from home now for a long time. A lot of businesses are going to offer greater flexibility going forward. And I think the areas that are going to benefit, we all talk about people moving to regional Australia, but I definitely think markets like Brisbane, Adelaide, Hobart can benefit from this as well, because people from Sydney and Melbourne who might need to be in the office in Sydney or Melbourne a couple of days a week can go and set themselves up in these markets. Housing's a lot cheaper, jump on a plane and go down to work. But I also think Gold and Sunshine Coast can be big benefactors of that as well, because they've got their own airports, they've got direct flights to Sydney and Melbourne as well. And if people want a bit more of a lifestyle offering than, say, Brisbane, they can go and set their families up there. And I mean, a lot of businesses will still have a Brisbane office. So if they need to go into the Brisbane office a couple of days a week, it's not a great drive along the M1 or the Bruce Highway, but it's certainly doable. And it's a lot cheaper than Sydney. And the travel time from the Gold Coast to Brisbane or Sunshine Coast to Brisbane is probably comparable to travelling from the western suburbs of Sydney, for example, or from down on the Mornington Peninsula in Victoria. So I think people will start to stack these things up, and it could make the region a lot more popular.
Great, could be good for Queensland. A question for you around investors. I know you touched on investors before. How is lending to the property investors going here in Queensland, and what's your prediction for this market as we move into the next calendar year? Yeah,
I think banks are still lending, but there is a lot more caution than there used to be around lending. I've actually been talking to someone about turning my property into an investment property and maybe buying another one. And certainly I couldn't borrow anywhere near as much as I thought maybe I could. So I think that there's still a level of caution around that. And to be honest, it's quite understandable given everything I've said about what we're seeing with the rental market. But the rental market itself is a really interesting one, because we know that it's got some challenges. We know that rental prices are probably going to fall. But in terms of property, when you factor in inflation, you can still get a positive yield on residential property. And you look at other safer asset classes like government bonds, or even, banks are cutting their dividends on their shares. Property is actually one of the few places where you can get a positive real return The challenge, of course, is just going to be finding that right property that someone does want to rent out, and that you're not going to lose that tenant. That's the important thing. So, it's really a double-edged sword with the rental market. Yes, there's challenges in terms of prices and demand at the moment. That will eventually come back. But the yields are still actually pretty good considering how cheap it is to borrow at the moment.
You touched on some really decent year-on-year increases when it comes to high intent in Queensland and Northern Territory. Do you think that sets us up for a fairly decent spring selling season here in Queensland?
Potentially. I mean, I think generally nationally the spring selling season is not going to be a typical spring selling season, and the reason mainly is because I don't think spring's as big a deal in, say, Queensland and Northern Territory as it is in places like Victoria and New South Wales, where you've got that colder climate. The big challenge, I think, is going to be what happens in Victoria, because you can see already, as I showed you, new listings are starting to taper off at the time of year when you'd expect new listings to start lifting. So I saw again today, COVID cases are coming down in Victoria. I think a lot of what happens in terms of new listings is going to hinge on what happens in Victoria, and if those cases keep falling, then I think people will be more and more confident to start listing their properties for sale. So I'm hopeful, but I don't think it's going to be a particularly strong spring selling season. But in saying that, maybe it's sort of autumn next year when we get the typical spring selling season. It's just kind of delayed 6 months.
We've got some questions coming through about the apartment market. How do you think the apartment market's going to perform post-COVID?
It's definitely going to be challenged, I think. Obviously, a lot of apartments, particularly in inner city, are rented. As I just said before, eventually the borders will open up. People will come back to Australia, but there's probably a lot of discussion around that. We know now that universities have become heavily reliant on overseas students. Maybe there's going to be pressure for them to be less reliant on overseas students. We're going into our first recession in 30 years. The Reserve Bank is saying the unemployment rate's going to be 10%. So I think there might actually be some pushback on high levels of migration when a lot of Australians don't have jobs themselves. So I think that there is going to be some challenges in the apartment market, particularly in that smaller 1 and 2 bedroom sort of investor grade apartment stock. And I think probably even more so for new development as well. I'm talking to developers at the moment. Home builders been very good for land and for house and land, but it's not offering very much at all in terms of new apartment markets. But, maybe we will get some form of stimulus around that apartment sector coming, but I think it's definitely going to be challenged for the next year or so.
All right, Cameron, that's it for the questions today. Thank you all so much for attending today. As always, really informative, Cameron. Appreciate your time, and we hope you have a great afternoon. Thank you so much for joining us.
Thanks, everyone.